Good evening, my fellow Riz Elite members. This is Chris with Riz International, and this is your weekly market recap webinar. And we are joined again by the one, the only Rizwan Memon. How are you doing tonight, Riz?
Doing well. Thanks for having me.
Oh, of course. It's always a pleasure to have you on here to get your insights as far as what's going on with the market and things of that nature, and get all of our members here on Elite get their questions answered by the man himself. So kind of an interesting week here in the market in the S&P 500, kind of a bit of a chop fest. And, you know, the 50 simple moving average seems to be holding as support for the time being. It seems to be actually pretty strong, all things considered, but it's been a very difficult trading week, if I have to say so myself. Riz, what is your take on what's going on in the market right now?
Yeah, like you said, chop. This is kind of what's going on. It's been overall a slower week, a little bit more of an indecisive week, and you could say that continues in, for the last week as well. But you can see, just coming into the start of May, 2, 3, 4 days, let's say 4 days after May started, 4 trading days. Well, the market hasn't come back from that level, as you can see, and we're it's been over 2 weeks about. So it's a bit of a challenging, choppy type of market. This is completely normal. This is completely fine. Again, we're looking at the S&P 500 here that, like you said, has beautifully used that 50-day moving average, that teal color, light blue color line there, and like multiple times. I mean, it's just amazing. It's amazing how not only there, back in March as well, multiple times, and even back in the end of January, February as well. So amazing support level there. And you know what? Again, we can't predict the future with these things, but they do help us in getting some kind of confirmation or some kind of I would say stability in what's occurring, especially obviously from a technical standpoint. Outside of that, though, we've seen a lot going on, with crypto, with some Federal Reserve, members speaking. We've seen quite a bit of uncertainty in regards to inflation. Still, obviously, tech is recovering a little bit, which we'll touch on later, but obviously not quite at the levels where they were most high growth companies. Right. So we're kind of in a bit of a consolidation area, not just in technicals and markets, but overall, so to speak.
I'd say the interesting thing that we've kind of been noticing lately, especially with it being earnings season right now, and a lot of the big companies letting their earnings out, is that the market seems to be really punishing any, sign of weakness at all. At least that's what I've been noticing. What have you been seeing in these earnings reports that's, really kind of pushing things around the way that they are?
Yeah, you're right. I expected earnings to be good, and overall they are. I talked about it a couple months back, where I expected this earnings release to still be a continuation of the solid earnings releases for the end of Q4 2020, and that has continued. But what has happened is most of it has been baked in, so to speak, because the market has sort of soured on many growth tech names and the like, and they're pretty much saying that we want some of this growth, some of these great earnings releases, whether it's just revenue based or earnings per share based, to essentially keep up before we start taking on more risk, right? Hence why you saw tech pullback, right? Why did tech pull back? Because we saw capital outflow from that sector. We saw stocks, or I should say funds, leaving that. Right. And really the XLK is a good example. Even the NASDAQ index is another good example. And take a look at how, although it's not too bad, the people, catastrophize a lot. But you can see that the tech sector is not as strong or as stable as the broader S&P 500 has been. It's recovering, as I said, as we can see, jumping up from that 50-day moving average, 90-day moving average. But with the S&P 500, obviously the broader market, largest 500 companies, has done a better job, because we've seen a rotation out of tech and a continuation of that from tech towards value, towards consumer discretionary, towards companies that have had solid cash flow, solid profit making businesses, right? That rotation was bound to happen. We just have seen it continue a bit since April. That's not to say everything's been negative since April, but I think until we get very strong confirmation of that trend equalizing of capital outflows slowing down out of tech, I'm still broadly, I would say, neutral but cautious. All right, I'm not bearish on the market just yet because the economic indicators are still great. The only negative I'm kind of seeing, and a little bit of a worry for me at least, is just the inflation stuff, right? As we saw with the recent print being higher than expected. But then again, GDP numbers are great. We're looking at other different economic indicators, and they seem to be holding up strong.
No, it's very insightful. I guess the one question I have, with this rotation out of tech is, and then we'll move on and talk about all the other market sectors. But, why are people rotating out? I mean, I think it has to be more than this superconductor shortage that, we heard about a couple months ago. What's the deal with that?
Yeah, it's a great question. Around semiconductors, we've seen a shortage around that simply because supply chains have broken down, and this is not recent. This has been for nearly a better part of the year. The striking part is that it's still continuing, right? We know that semiconductors are used in everything. People underestimate, what is these are used for, and not just computers, not just graphics cards and RAM and laptop stuff or gaming consoles. Not just that, cars. Cars have massive amounts of semiconductors needed just for the electronics, processing, safety precautions, all that stuff. Even something as simple as a calculator or a remote that you use to operate your TV, anything, your vacuum, your phone, obviously. Anything and everything nowadays has a chipset in it. It requires some sort of chipset, big or small. And guess what? Anytime we see a shortage, it's impacted significantly. In fact, for those of you that are watching that are maybe gamers or younger demographic, or maybe not, it's not a surprise or a secret that the new gaming consoles, I say new, but it's been about 6-7 months already since they released. There's still a shortage of that, right? Globally. So why? It's because there's not enough chipsets going around. And on top of that, you mix in with the rise and the boom in crypto, and of course, subsequently crypto-related projects, crypto-related mining, all that stuff, that further increases the demand when there's not enough supply to meet it. Guess what? There's no surprise. You've seen, people using bots trying to, as soon as the next supply comes in for the new consoles, people using bots to get them and book them and try and buy them right away as soon as they're listed. There's no surprise that, we've seen graphics cards and processors and all the stuff like that just fly off the shelf, so to speak. And that too at a higher price. So it's something I'm keeping an eye on. I think what's happening now is, look at it this way. Because there's a supply shortage, it's negatively impacted, many of the major semiconductor companies, whether it's NVIDIA, whether it's AMD, whether it's Micron, whether it's Taiwan Semiconductor, TSM. There's all these companies have dropped from their highs, not only because of this, also because of the rotation out of tech base, but this is negatively impacting them. Why? Why? Because the market is seeing their revenues lower because there just isn't enough to go around. So obviously their revenues are going to be lower. Their margins are still going to be there, but they're able to sell less, not because they want to sell less, but because they have no choice. There just isn't enough materials and supplies to create those. So I am pretty bullish on semiconductors going forward. Semiconductors are a cyclical industry, meaning they have periods where they're all the rage, and then periods where they're kind of just stable, right? And I'm still bullish on semiconductors, especially once the supply constraints have been addressed. I'm hoping that occurs, sometime in in the second half of 2021, which is, we're after June, we're going to be in the second half, which is absurd to me. But yeah, I'm pretty bullish on that. And that, for those that are in elite, obviously know that, I have a few holdings, one is AMD, and so on and so forth. But for those of you that are not in elite, and if you're able to watch this in a recording afterwards, I have a position in AMD, as Chris has up here, and it's looking fantastic in a technical standpoint. It's not like the company is going anywhere, and you mix that in with my bullishness in semiconductors, and I think it's a good fit. Again, just a suggestion. I'm not saying people need to go out there and buy AMD because of what I just said.
Thank you for that insight. That's very, very detailed, and I think a lot of people will gain a lot of knowledge from that. And talking about all of those different sectors that we look at here, that comprise up the majority of the S&P 500, the big ones, the big dogs, energy and financials are way overperforming the S&P 500 at this point. Energy up almost 38%, and financials sitting right around just a smidge over 29% on the year so far. Real estate up almost 20%. The market itself still doing just fine, up 12.5%. And then we have the three indices that are underperforming the S&P 500 right now would be healthcare, utilities, and tech. Tech being the lowest, which is a bit of a reversal from years past, where tech seemed to always be the golden boy, and energies was always in the dumpster. And things have kind of reversed now. So, Riz, what do you really attribute most of this to?
Yeah, so you're right, absolutely. And I think the most critical part, what you said, was how the roles have reversed, how mean reversion has factored in. I mean, Chris, if you were to go to the next 1 year, if you click 1 year at the bottom there, you'll see how, look at what's happened. Financials have been the standard benchmark there in terms of growth for the last 1 year. Right. Whereas if we were to scale out to 2 years, I know it has 5 years there, but ultimately, if you were to scale out to even a little bit further, and you can see how that, look at tech, they're taking the lead, right? So tech has been the leader over the last few years. But if we are zooming in and looking at 2021, well, the rules have changed significantly. Look at energy, right? If you go back, remember, the further we expand the horizon, the less it looks good for energy. But if we're just looking at it from a year-to-date standpoint, like Chris has said, it's been a tremendous run, primarily because commodities have run up, whether it's oil a bit, but primarily lumber, right? We've seen massive run up in platinum, in copper, in various different commodities, not just metals, right? We've seen massive increase in pricing in coffee, right? We've seen huge increase in prices for cattle, for hogs, pork, all these kinds of things, and it's something that I find fascinating. People need to be aware of, because think about it this way: the last year and a bit is not a surprise. The world has shifted on its axis for everything that's occurred, but still, as supply has gone down, not only in semiconductors, but like I said, for major commodities, demand has gone up. And this can be seen for many reasons. And I'm not going to get into the details of it because this webinar won't be long enough. But it's amazing to think that people have the means now, because they were saving money, meaning they were saving money on stuff they would have spent, meaning they would have bought more stuff. They would have traveled more. They would have taken more vacations. They would have ate out more at restaurants. They've commuted more. All that didn't happen as much anymore, right? It's not a surprise considering all the things that happened last year. So, Chris brought up this great meme. Yeah, it's awesome. I mean, there's so many amazing memes of these, lumber and it's crazy. It's crazy, but I think it's going to normalize as the world gets back to normal, so to speak. But you're right, the roles are reversed. Energy is continuing to run. I think, right now, once we do look at oil prices, I'll expand on that a bit. But I do anticipate a comeback in tech. So long, okay, there's a caveat there, so long as we see inflation normalize. We saw inflation, I think, 4.2%, 4.8% year over year, which is about an annualized number. It's supposed to be in and around the 2.5%, 3% area, okay, based on the Federal Reserve. So that's a huge uptick, and that's what's got the market spooked a little bit in terms of these growth names, right? And it's something I've talked about before, so I'm not going to keep on repeating it. And of course, that ties into bond yields going up as well. So it's something we're keeping an eye on. I am bullish on the market in the long run. Okay, you can note that down. Okay, and of course I can be wrong, but I'm not here to sit on the fence. I'm here to take a stand and tell you what I see and what I think. I can still be wrong, but I'm bullish in the long run for now. Let's just say 6 months, a year from now. Maybe not in the near future, like next week or even next month, but long term, give or take. And for me, long term is again 6 months to a year out, bullish. And that means, what does that mean? That means tech can recover. That means commodities can stabilize, because having commodity prices so high where they are isn't really a good thing, right? It's good for the producers to a certain extent, but it's not sustainable where it's at. So having lumber pricing where it's at right now has added a good 30,000 to 40,000 in costs for builders for each house, right? So again, over here, I'm talking about where I am in Canada. So that's a huge amount in the grand scheme of things, right? $40,000 more just because lumber prices went up. That's a huge amount, right? When you consider that there's houses, in certain states in the U.S. that are 200,000, right?
Oh,
so something to keep in perspective. Hopefully, it's opened your eyes for those of you that are listening in live or recording.
Absolutely no. Speaking of commodities prices, let's go ahead and take a look at that. Oil, just kind of chilling here. We've been kind of slowly pushing up. We kind of hit some resistance here around 66.60, it seems, and kind of came back down a bit here. Looks like we closed on Friday at 63.58 a barrel. So not a whole lot of movement in oil, but you want to see some movement. Holy cow, look at gold. Gold is just on a flipping tear. Riz, I know you said you wanted to talk about this, and yeah, I think this is definitely something to talk about. What is going on with gold?
Yeah, so I've been bullish on gold. I even said it on social media. In fact, I had some plays for elite members in gold. I have closed some of the gold positions now that I had there, not only as a bullish bet on gold, but also as a hedge. I have closed some of those. Again, I'm kind of waiting for it to stabilize. Like you can see, it's been on a great uptrend and a great bounce from the 1680s, area for the long-term support in the earlier part of the year. Right now, I'm letting it cool off a bit. See if we can get back to the 200-day moving average, which is around 1840. So keeping an eye on that. In regards to oil, again, and it's not surprised we're at this. Remember, I said $65 area is equilibrium, and man, it's been respecting that pretty good. I mean, $1 here or there is what I consider to be equilibrium. I am anticipating that OPEC probably going to continue to ease off the cuts, meaning supply is going to continue to go up a bit. And of course, based on supply and demand, unless we see a lot of people start traveling and we see a lot of commuting coming back, or all that kind of stuff, I think oil can remain around the 60-65 area. If we see a big shift, meaning we see a lot more demand than expected, then of course I think the next target would be $70 a barrel. So I'm keeping an eye on that 60 area first. I'm not holding any direct oil plays, whether it's via the futures contracts or ETFs. For now, I'm just kind of sitting on the sidelines in this sector.
Gotcha. Now you mentioned crypto. Let's go ahead and take a look at good old Bitcoin. See what's going on with that. What has Elon tweeted about this week? Oh, well, it looks like the crypto people don't really like it at this moment. We are well off the highs off on Bitcoin here. We were sitting close to 65,000 and down she goes.
Yep. Not surprising. I mean, it had to cool off. This is fine. And I'm not here to bash crypto or pump it either. I'm not here to do either. I'm here to say that, for those people that were looking to buy crypto at 50,000, BTC specifically, or 40,000, while it's at 37,000 right now, live pricing. Well, now it's your chance potentially if you really were bullish. I'm not saying you have to go and buy it, or you should if you were bullish at buying at that price. To me, it blows my mind when everyone's like, oh my God, crypto to the moon, BTC is going to hit 100,000, and then they'll want to buy it at 50,000 per coin. But now it's at 37 and those people won't buy it. I get it. Technicals are a thing, but what changed, right? So to me, it's like if Walmart, puts a sale on something. Again, this is theoretically. People, it's like running out of the store and saying, yeah, it's on sale, I can't buy that. But the moment Walmart increases price on something, then you want to go and buy it. So it's kind of an odd dichotomy that we see in markets, right? Anytime something sells off, people will sell and get out when it's technically the opposite should be happening. But that's a different topic altogether. I think I wouldn't be surprised if we see 32,000 area kind of next. This is not the most bullish thing. One of the reasons that it's dropped is there's been a lot of catalysts all at once, right? Elon Musk kind of being a bit wishy-washy in terms of his crypto holdings. He later clarified that, Tesla still holds Bitcoin, or he still holds Bitcoin. And that plus the fact that we've gotten news, which is a bit sensational around China, trying to crack down on crypto mining and crypto trading. And this happened in 2017 too. It's like deja vu to me, where China coming in and saying some things that are not too bullish for crypto, and then that having a negative impact on crypto. In fact, it's contrary to belief. People think that China is banning crypto. That's not true. That's a headline. It's not true. It's something that China's always been a bit controlling on the activities of its citizens in and around cryptocurrency. Okay, whether it's mining or trading or holding and whatever. So that hasn't changed. In fact, that hasn't changed since 2017. What they are more, I would say, bearish. I think it's a bearish catalyst. Is they're just talking about it more. They're making their citizens and the world aware that they're taking a little bit more of a controlling stance on it, right? In fact, many countries are. Just this week we even saw the U.S. Treasury along with some Fed speakers talk about crypto and say, what, there's some major problem with it. In fact, I'm hearing that the current administration wants to potentially tax crypto a little bit more aggressively, and potentially on any transfers or exchanges of $10,000 or more. How they intend to implement it or police it or enforce it, I have no idea, because to me it just sounds absurd. But all these things, when you mix it in, is a bearish headlines, right? These are things that spook people. And what we also saw is something that a lot of people may not know, is there's been a lot of leverage at these exchanges where individuals are allowed to leverage. They're allowed to buy more crypto than they can afford with the cash. So they're able to use the exchanges money. And as a result, for those of you that know, it's like margin, right? So they're allowed to trade crypto on margin. What happens when something goes against you significantly, like in BTC when it has, swings of 5-10% in a day? Well, you get margin called, and that forces a liquidation. So we see forced liquidation happening, and that's what causes these massive moves, right? So it's a bit of a self-fulfilling prophecy. It's neat to see it happen in action. The fear and greed pendulum swings so extremely, which you can never see elsewhere but in crypto. And that's been the case, especially since last year, since things started heating up. Right. To me, it's reminiscent of 2017. I've said it before, say it again. I'm not saying that crypto is going to crash or it's going to go to zero or it's gone. No, I think BTC and major crypto is here to stay. I just feel like, it's not something that is for those people with a low risk tolerance. That's all I'm saying. And that break below 200-day moving average is significantly bearish. It's looking like it can hold, but if we see another couple red days, so to speak, I think that could spell a little bit more blood in the waters for crypto, and I wouldn't be surprised if we see 32,000 level next.
Yeah, I mean, you hit on a lot of points there that were really good, talking about the fear and not being able to, buy low and sell high. People are always selling low and buying high, and, they cry about it when it actually, you need to be doing the opposite of that. And it's definitely, it's a hard psychological thing to do, to buy something while it's down like this, because of the just the fear of the unknown of what might happen later. It's like you're sitting there thinking in the back of your head, like, well, what if it goes lower? What
Yeah.
happens if if it keeps going down? What am I going to be? What situation am I going to be in?
Yeah. The difference with crypto is there's a lot of headline risk. There's a lot of regulatory risk. And guess what? There's nothing there. Crypto isn't a company. There is no, leader. And that's a good thing because it's supposed to be decentralized, but it's not able to do anything. It's not a product, that's out there. You really can't even use it. Anyone that tells me they can use crypto like BTC and there's a use case, I'm not going to entertain that thought because there's no one that I've met. Yeah, I know there's some BTC ATMs and some select people or companies will accept BTC, but it's very far and few between. Case in point, even Elon Musk backtracking on that, which is not surprising at all. That no longer is Tesla accepting BTC because of the negative environmental impact of mining, which to me blows my mind. That how the fuck do you not know that? But hey, you know what? It's Elon. Anyways, the problem with crypto is there's no floor, so to speak, right? Is the floor 20,000, which was the previous long-term high of 2017? Is the floor 5,000, 10,000, where it kind of consolidated back in 2018, 2019? What's the floor? So that's I think the biggest hangup of crypto, and because it's so supply and demand related, it's so sentiment related, right? Which is not a bad thing. It can be a good thing if traded right. But that's the issue. Whereas with Apple, that Apple has, an X amount of billions in cash. There's intrinsic value there, right? You take everything. If Apple never sells another iPhone or another Mac, it has intrinsic value just because the assets it holds, the factories, it has the cash on hand, it has the inventory. So this is what people, I think, need to understand and compartmentalize and not just fucking tell me the same goddamn thing again and again to the moon. Okay, if I had $100 for every moron who messaged me and say, Riz, you should do this, do that, man, I'd have 5 McLarens right now.
We need to figure out how to make that happen. If we could have,
honestly, it's not worth it. Not at the cost of my sanity, man.
Fair enough. All right. Well, I know you had said to me before the webinar, you have some trade ideas you want to pass by us here. So what are you looking at this week, Riz?
Yes. Yeah. So these are pure technical setups. In fact, there's continues to be some good technical and potentially fundamental plays available in the tech area. One of them that I'm going to mention is a stock that I haven't been a biggest fan of. It's not like I'm a biggest fan of, but on a technical standpoint, is Peloton, P-T-O-N, Peloton. And this is looking good from the 80s area floor. Again, it's had a great rally the past week and a half or so. If you look at it where it was and all, the all-time high was way too crazy. No way did it, make any sense to have that valuation. So I'm not expecting that, to happen anytime soon just yet. But even at 100, if it can get to 120, 115, I think that's a great risk reward. You just have to make sure that it suits you. You have the risk tolerance because this thing moves big. This will move a few percent, up or down either way. So if I don't have a position just right now, I have traded before. I don't have a position now, but if I think this curls a little bit lower, I will see if it can hold a certain level. Maybe it can hold this 100 area, which is a high, a full dollar mark area. So, and of course, it's also a potential resistance prior. If you can see back in March, previous support acts as current resistance. So I'm keeping an eye. If it breaks above that, that's known as a breakout bullish there on a technical standpoint. Again, the fundamentals is a different story. It got battered because they've had great growth. They don't make any money yet, but they've had great growth because of COVID, right? So as things open up, the market is soured on that a bit. Not to mention that lawsuit, right, where they had to recall their treadmills, whatever they're called, and to fix them. So that's a cost there, right? So keep an eye on that. Another one I like is TTD, the trade desk. And this has nothing to do with trading. In fact, it's an advertising, marketing, automation company. And this is a great setup, a fantastic setup, if you will, technically. Even fundamentally, this is a great growth company, in fact, doing very well. Again, a growth company, and they are doing a split as well coming up at the end of this month, or sorry, June, I think. Yeah, mid-June. So they're doing a 10-for-1 split. That's a pretty good thing. But keep in mind, just solely based on technicals, that 495, 500 level is such a beautiful full dollar mark support right there. So I think this can run up to 600 area easy. I'm not anticipating, anyone to try and buy it to hold it to 900 for the near term, unless you're a long-term bullish on this. But for the swing trade, remember, a swing trade, not a day trade, none of that garbage. I think you know what, this is a great setup.
Nice. That's definitely a couple interesting names to keep an eye on. A couple of trades that we took this week in Elite. I figured we could talk about that real quick, and then we'll open up the floor to questions. The first one was Sareptas SRPT, but I believe we closed this one, if I'm not mistaken.
Yeah. It was more of a YOLO play.
Sadly, this one just didn't quite work out.
Yeah, got in. I think got out in the next day. And provided guidance. So I took a little bit of a loss on that, but that's fine. I'd rather get out. I don't want to bag hold this. It's obviously a biotech or biopharma company, and it's not something that I want to be bag holding at all, or sitting and praying about it. So I took the loss, moved on to the next.
Yeah, sometimes it just doesn't work out, and you have to understand your thesis. If your thesis says it's like, hey, we're not going to bag hold this, then guess what? Don't bag hold it. I know it's very insightful, but sometimes people need to hear that. Another one, a name that everyone should be fairly familiar with here, especially in Elite, if you've been around for any period of time, is SQ, Square Incorporated. I got in long on this one right before actually right at the open for the most part on Friday morning around 9:30 or 9:43, excuse me, in long at 206, a little red on the day. But yeah, I mean, that 200 level seems to be holding pretty solid for SQ at this point.
Yeah, good technical setup on this. Something I really like, and you know what, this can also do quite well in the near term, so long as markets hold, and of course we see the rotation out of tech, slow down.
And then I think will be a great way to segue into our Q&A session here, because we had a question come in earlier. Wanted to understand how we know when people are rotating out of one sector and into another. I know that's thrown around a lot. We say, oh, well, we're seeing a rotation out of tech. How do we exactly, see that?
Yeah, the great question. One way we see it is as it's happening. We can't predict with a reasonable expectation what will happen, but we can see as it's happening. So when we see the NASDAQ, right, which is the U.S. Index for pretty much all the major tech stocks, small and big, when I see the NASDAQ, or sorry, not NASDAQ Inc., Chris, bring up IXIC. Yeah, I think that's what they call the index. There you go. Yep. This is the index. So when I see the index for the NASDAQ pull back, right? Pull back from the highs around 14,000. What is that? 14,500, 100, 200, let's say, pull back. Okay. Remember, that's happening. And I see on the flip side, consumer discretionary companies that are more value plays, companies like even energy to a certain extent. I see those start picking up and moving up. I see even financials. I see that's a rotation, right? And that's one of the best ways to identify, seeing what area is dropping. When I see pretty much all tech stocks dropping in a day, and on the flip side, I see stuff like Johnson & Johnson. I see things like Procter & Gamble, McDonald's, Walmart, that stuff going up in the same day. That tells me a rotation is occurring, not only for the day, but as I see it continue for weeks. That is classified in a nutshell as a rotation.
Awesome. Thank you for explaining that. I see we got multiple people typing here. We'll give you guys just a second to go ahead and get those questions into us, whether you have general market questions, whether you have things. Okay. Riz, thoughts on technical for TDOC and coin for entry. All right, let's take a look.
Yeah. TDOC is great in terms of technicals, in terms of holding that 140 area, but I'm not convinced. This thing's been a bit of a pain. I think I had some time back a few weeks back, I took a loss on it. So for me, I'm not getting back into this. It's great in terms of what it does. It's in the right sector, for telehealth. But I'm not surprised the market's kind of butchered this. Why? Because things are opening. All right. And it's kind of been the reopening trade where many reopening stocks have done well. This is contrary to that, right? This reopening of the economy and the world and moving on from COVID isn't a bullish thing for telecommunicating health related things. So it's not mean that the company is horrible or it's going under. It's just not a position I personally want to get in, technicals aside. For Coinbase. Coinbase is an interesting one. I have some short puts on it, which I think expired worthless, and I get to keep the premium. This is a recent IPO. Obviously, it's gotten slaughtered. Why? Because it was already at a very frothy valuation. Not to mention, I think they also did some debt offering, which is not the best thing after you do a frothy valuation IPO. To me, it blows my mind. I'm waiting for this to just find a floor. I'm personally not buying this. I mean, yeah, I can rally if crypto or BTC goes up 10% tomorrow, this will run up too as a sympathy play, but it's not a stock that I want to buy just yet.
For sure. Kyle wants to know what your thoughts are on the upcoming split for NVIDIA. Is that a good opportunity to pick up some shares?
NVIDIA. So NVIDIA is one of the best semiconductor companies out there. It's had a tremendous run, last year, and this year has been pretty volatile, but not as great of a run so far year to date. But obviously, we know this. The split news is factored in on a fundamental standpoint. On a money standpoint, a split doesn't matter. It's just the math behind it is that your value is the same. All we know is that in this market, because there's a whole bunch of people but who don't really know any better, they think, oh, the stock price is lower, so this is better buy. No, it doesn't matter. It's just the market cap is the same, the valuation is the same. So from that standpoint, it makes no sense to buy as the company alone, as a trade on its own. Yeah, I think it's a great pickup from the 200-day moving average. I just feel like it's getting close to that all-time highs. I avoid buying closer to all-time highs, just personally, just me. I like to buy more so at critical support levels, critical areas where I find there's more upside than downside. Doesn't mean it's not a great company though. And we also know one catalyst coming up with earnings this week on it. So something to keep in mind. Earnings is a toss-up. So I always say, proceed based on your own risk when it comes to earnings, because no one knows how they're going to go, especially how the market is going to react. As we've seen, even good earnings is punished a bit. Why? Because most of these stocks have run up so much, right? They need to be absolute perfection and even better than perfection for the market to be favorable on it. So that's one of the things I say, I would just kind of hold off.
All right, Aaron has a couple things that he's looking at. It says along the same lines of what we mentioned with TTD, he's seeing Frog, SSSS, setting up for reversion and W bouncing off support level. Let's take a look at those real quick. Frog, okay. I'm not familiar with this one.
Yeah, I'm not familiar with this, but this is looking good on a technical standpoint. Not too familiar with the company. Quad triple S, SSS, that another ticker that I've familiar with. But yeah, these are some good technical setups, pure play technical setups. Obviously, this is a smaller cap. Again, WU, Western Union, I'm familiar with. They've had a good run the past, this year. Bit of a pullback, of course, but I think if it can hold this 90-day, 100-day moving average area around 2450, I think that can be a good area for long, but not yet, right? And I think that's great. I think Levi has also mentioned here, bounce off the 50-day moving average is like you said, not a great feeling after 4 red days, but let it find a floor, right? We don't need to be out there chasing. We don't need to be out there taking trades for the hell of it, because every trade has risk involved. So patience is key in this case.
I like this question from Matthew. He says, if the SEC would succeed in tracking large crypto transfers, do you think crypto itself might lose some volatility and the general craziness calm down a bit?
Yeah, so that's a good question. I feel like no. In fact, I would see that outright as a bearish move. So in a way, I think the opposite. It would increase some volatility in the near term. And will it help in getting calming things down? No. People will speculate. BTC is BTC, especially when it has these major, rally and dump. Anything that loses 85% of its value from a high, which it happened in 2017. I'm not saying it's going to happen again. Uh, Although BTC has dropped, lost about 40%, I think, from its all-time high so far at 64, Chris?
Give me a second.
Ruler, yep, around 64. Yeah, 42%. Look at that, right? Like, it's not very confidence inspiring. And I know the crypto people will hate me, even though I'm just speaking objectively here. So you know what? I think it can induce more volatility, all things considered. I think we need to see what happens. I know people have been saying, "Oh, regulation's coming." Maybe, maybe not. How are they going to regulate it? I have no clue. And I would wager that even the officials don't know. So, yeah, just my 2 cents on that.
It's interesting because I have some friends in the tax field, and they showed me the upcoming tax forms, and it asked the question whether you, and this is for our U.S. residents, so it asked the question of whether you traded cryptocurrency or not. And I'm just thinking to myself, well, how can they prove whether you're telling the truth or not, because it's completely decentralized?
Yep.
So, all right. So, question from Jose. Says he's having a problem with his connection. Sorry about that. We will post the replay on Elite, so you don't have to worry about it. You can always watch the replay. But he was curious if we think the TTD would be better for an options trade or holding the underlying stock.
For TTD, yeah. So I would say go with the stock. I would say go with the stock. Simply, obviously, there's more upside when you buy a call option, per se. I just feel like, it's for just risk management side. If someone is okay with whatever the premium is, let's say someone wants to buy a 550 call expiring 2-3 weeks from now. I don't have the live pricing on, it's not live, but I don't have the recent pricing. But let's just say it's like, it's probably going to cost, maybe $500-$600 per contract. Is someone willing to lose that? If they're able to completely lose the $600, then yes, the asymmetrical risk reward in benefit of buying calls is there. If someone is not able to lose their complete investment of, let's say, $600, then buying that stock is better, because now you don't have that time constraint. You don't need to be right significantly in a span of, whatever the expiry is, whether it's 2 weeks out, 3 weeks out, month out, 2 months out, and further the expiry, obviously, the more premium. So it's a bit of a tricky question. I personally say if someone needs to ask that, I usually say just go with the stock. Right. I'm agnostic in this sense that I don't, favor options just because they're leveraged and higher upside. I also don't favor any financial product. Just on face value, I look at it the situation, right? And I think on a more stable, on a more sleep easy at night, I think a stock trade on TTD would be better.
This is the beautiful thing about buying the underlying, guys, because I will remember this trade that we had probably for the rest of my life. It was on Walmart. And we got in before earnings, and they just got killed. Now, this was back in, I think, like 2018 or something like that. And, we held and we held and we held. And, it just kind of kept going down. And I'm sitting there asking Riz, where do you think it's going to stop? He's like, I don't know, but we're going to hold. And we held, and it was like, I think maybe like 1 or 2 earnings seasons later, the thing just shot up. And we were holding the whole time, and we got out with a profit. And if we had done an options trade on that, well, we would just be out the premium, because they would have, expired worthless. But the fact that we were holding the underlying allowed us to continue to hold because we believed in the trade, and we got out with a profit as opposed to taking a loss.
Absolutely. That's a great example, because I remember that, in fact, very well, because we held it for essentially over a financial quarter. That's why the misstep that they had in the one quarter was rectified, and we were able to benefit from that because we were able to hold it. I highly doubt we would have, or anyone would have bought an options 4 month out on Walmart. So I look at that as the underlying buying the common shares is amazing because it gives you, in a way, more flexibility. The reason options, especially buying call options, is so favored with people, especially the younger crowd, is because the high percentage growth and profit as per the investment amount. So, but what they don't think about is the chances, probabilities of actually making money when you buy an option, especially a near dated option, is very, very low. And you can have 10 trades, and out of that, maybe more than 60-70% will essentially go half because the move didn't happen that you wanted in the time frame that you needed it to, right? So it's a bit of a complex topic, but ultimately you cannot get the flexibility you do if it's a stock that you're able to carry for months, like you would with holding the underlying stock itself.
Speaking of carrying something for months and holding the underlying, Matthew asked about the four-letter dirty word around here, which would be Plantair.
Yeah.
So how are we feeling about PLTR since it's holding around the 20? Now, I've okay, guys, so full disclosure, I hold this myself in my portfolio. So I've kind of gone and done some technical analysis drawing here. So forgive all my drawings, but me personally, I'm kind of liking the directions that we're going right now. But Riz, what are your thoughts?
Yeah, I agree with you. If there was a time to panic sell, that's not now. The tide is more in favor of us. Why? Because they had earnings, a couple of weeks ago, and the earnings were actually good in terms of not just meeting and exceeding EPS numbers, but for future growth, for future revenue guidance. They had a great day after earnings. But as you can see, that kind of faltered and then it picked back up. I think this can continue to run. There's no reason for me or anyone who's held out for this long to sell now. If they didn't sell earlier, there's no point selling now. I know it sounds counterintuitive, but bear with me. When we have to factor in material change, which is positive earnings, we have to factor that in now. If they had horrible earnings, okay, and the stock was here, then I would at least understand that, maybe we just want to cut the loss and move on from this thing. But after a change in a material change, which is an earnings release and forward guidance and projections and revenue projections from management being pretty solid, I like to think that there's more upside, especially more so than when I thought a month ago. All right. So that's my thoughts around Palantir. I think it can continue. For me, although the trade's in red, I've been holding it for months. I am not too worried. Why? Because I believe in management. I believe in what the company does. It's a very, very niche play, very, very high barrier of entry. And guess what? Pretty much all of its revenue comes from the government. So anytime you have the government, specifically the U.S. government, in this case, as your one largest and almost sole revenue, that can bode really well, especially when you're in the industry that Palantir is, in terms of data, in terms of all that kind of stuff that kind of goes over the heads of us regular people.
It's a good way to describe it. Oh, it's so true. All right, I got at least one more person typing, but if you got any questions, guys, now is the time. Of course, Matthew, we're more than happy to answer your questions. Glad you made it tonight. I see Connor's typing here. We'll give him a minute. Original typing. Got some new names in the chat. Thank you, everybody, for coming tonight. I really appreciate it. It's great having so many people here. I remember back when we started these webinars, I was lucky to have like 3 people come on.
Yeah, early days. Back then, when we first started, we even had like 10 people, right?
Yeah. When we had a webinar with 10 people on it, it was like, holy cow, wow, that was huge.
Yes, it was like being a rock star.
Pretty much. I still feel like a rock star, though. What can I say?
Well, of course.
Wow, these must be some fantastic questions. Okay, here we go. Yep, they're big. Okay. Connor says, I know a common strategy is people that trade pharma companies near FDA announcement dates. I'm going through long straddles in the options course, and my initial thought is these would be perfect opportunities because usually the stocks jump one way or another, typically in a large fashion. What are your thoughts on that, Riz?
Great analysis, great breakdown. You're absolutely right. Except I wouldn't be who I am if I didn't kind of throw a chink in the armor there. One of the things that makes it less of a viable strategy doing that, again, you can do it. People will do it. I'm sure some will work out great and some will just, do absolutely nothing. The problem with that comes is keep in mind that the market is efficient relatively. They know that there's a catalyst coming. And of course, if there's options on it, what's going to happen? The implied volatility is going to go through the roof. So it wouldn't be surprised when you see these biotech companies, these companies that have FDA announcements and they're smaller caps, they're going to run big in one direction or the other. While guess what? The premiums will be very high. You will not surprised if you see premiums, implied volatility be, about 150% and up, right? So you'll see that kind of factor in. So the market knows that there's potential to be money made on either side, but those high IV, thus high premium, will not only increase the cost, also increase your obviously your max loss, and your potential to succeed because you're going to need a much larger move, right? It's not uncommon when you do a long straddle that you get a nice large move, but it's not large enough to make back and make up the cost of those two call options or that one call and put, right? So it's something I wish was easy or had some sort of identifiable edge. I have yet to find it. That's just me, and primarily because of what I mentioned. Because guess what? IV goes up, premium goes up. It's just mathematically more difficult, right? Yes, and in follow up, Connor says, the market knows it will jump one way or another, and it will do so big, but the price of the straddle will be so high that it still likely won't work out. Yes, you're right. That's exactly what I'm saying. You could get the move you want, but because it's so expensive to put that trade on, because IV is high, guess what? Your chances of success go even lower now because you need an even bigger move. You wouldn't be surprised that after factoring in costs, you need like a 20% move, 30% move in a direction to break even. Does that happen? Some ways, yes. We've seen some of these biotech companies move up 100%, 50%, 60%. Is it commonplace? No.
It sounds like options like these are just kind of like, getting back together with an ex-girlfriend, right? So you go and you do the thing, and the next morning comes around, says, well, it was nice, but it wasn't quite nice enough.
Well, that's a heartbreaker.
Just like options.
Well, to be fair, options are amazing, Chris. Like,
I know.
It's a good point you make. I mean, there's nothing on this planet that I know of that's legal and allowed me to make income because the way I trade options, and I know Connor's taking the options masterclass. Once he gets further, he is going to see that there's more potential, especially as that there's a completely different way of trading options that has a higher chance of success, is in a way less risky, but also more conservative. And although you might make less per trade, you actually are winning way more. So again, I talk about that in my options masterclass. It's something that I prefer trading that way. And so far, there's nothing on this planet that allows me to make that kind of money using the capital that I have and in such a low risk fashion. And all from my phone or my computer, and I don't have to deal with anyone or any bogus. And it's completely legal. It's completely clean, transparent, efficient.
Absolutely, guys. So if you haven't taken the options masterclass, you really owe it to yourself to do so. I know multiple students who have done it that have basically paid back the fee for the class within the first month of trading, working with the strategies that Riz outlines in the options masterclass. So highly recommend it if you haven't taken it yet. We have another question. Just a general question. What is it meant by the fundamentals have already been priced in to the market?
Yeah, good question. This is a common question, and I've addressed it many times. The best example I can give is, A fundamental priced in is one thing. A catalyst is what mostly people are talking about. Think of it like the Apple, iPhone unveiling usually happens in September. People think, oh, I'm going to buy Apple stock before that because you're going to unveil the next iPhone. Well, the market knows that. People know that. It's not a surprise, that they're going to have an unveiling sometime in September or area. So that's priced in. In terms of someone buying it for that catalyst, well, there's no guarantee the stock price is going to go up or down solely based on that, because the market has disseminated that information widely and it's now priced in. What you could mean in terms of fundamentals is fundamentals are priced in after the fact. Fundamentals are priced in once Apple releases earnings, and they're good or bad. I would say the next minute or the next hour, the next day, it's priced in now. The market knows. After that, that catalyst is complete. It's moved on. Now the people are just going to be worried about, okay, how are they going to do on the next earnings, or how is their next product launch going to be, or next is just all speculation and sentiment, right? So there's a fine line between fundamentals and catalysts being priced in or not. It's not as clear cut or black and white.
There you go, guys. Well, thank you so much, everybody, for coming tonight. I really appreciate it. It's been a great discussion with everybody. And of course, Riz, thank you so much for your time, being able to, answer all of our questions and be there for us. I know you're bombarded with direct message and Discord every week. And I just want to thank you for your dedication to all of our elite members, and especially to all of our elite members for putting your faith in us.
I appreciate that. Yes, thank you, Chris. And of course, thank you to the elite members, the supporters on social media, in elite, outside of elite, everywhere. To me, it's mind-blowing. It's amazing. I love that. I love you all. Thank you so much. It means a lot to me. Of course, I'm passionate about it, committed 100% to this. And it helps that I have no life. Well, I don't have any life because of what I do. But you know what? It's not all great, but I cannot complain. I cannot say anything bad, because guess what? I get to do something I love. And where else am I going to get to speak with and talk about and hopefully, learn alongside and mentor and grow with these amazing people across the world who share a passion for markets, who share a passion of becoming better and learning. To me, there's nothing better than that. There's nothing better than improving. And I will leave people with one quote. Maybe you've heard it, maybe you haven't. Maybe you heard me say it not. But I've always said one of the greatest joys in life, one of the happiest things that you can, or one of the most lasting things of happiness. Things and cars and things and items will make you happy, sure, and they're great in their own right. But they're not the number one thing or the thing that will keep you happiest the longest. What that is doing something that's challenging, doing something that's hard, doing something that not everyone can do, and doing it well, getting better at it, mastering it. That kind of happiness is nowhere else to be found on this planet, I think. And to be able to do that and do it with people on the same mission and people that see things in a similar way, okay, and they're like-minded as you, they have the similar values and goals, and man, I genuinely believe I'm blessed. It's not all great, every day, but overall, man, I am blessed. I'm grateful, and it's an honor. It's really no other way I can explain it.
There you go, guys. That's the quote of the week right there. So, guys, let's go out and crush it on Monday. Thank you again for everybody coming out for the live show. I hope, next time we have Elite being opened up to new members. If you're watching this on YouTube today, I hope you'll take that opportunity to get in, because this is a community unlike any other, and you're definitely missing out if you're not part of Elite.